Good morning, YouTube. Just going to do a real quick video here on some ICT concepts and some trying to trade the open here. I'm waiting for the IDR box to be formed, and just looking for some ways to add to my toolbox. So the price is live right now, so we're moving. We're in the opening, but I just wanted to kind of show you. This is like just a textbook example of how this stuff's supposed to work, I think. So when it opened up at 8:30, 9:30 at that time, I saw the bottom from the SMT divergence with YM, and I'll show you what that means. So I'm gonna pull this over here. Here I've got ES in the middle, NQ on top, and YM on the bottom. So what you're looking for is for one of these to sweep highs or lows. So YM swept the lows here. ES did not. ES did not come down here and make a new low. Neither did NQ. So that's a bullish sign that you're probably about to get a reversal here. Okay, this one already came down, swept. No reason to go any lower. It's about to turn up. So when I saw that, I could have got in long right here at the bottom, and it would have been timed perfectly from what I'm seeing. I didn't trade it all today. I'm just I got to go to bed here pretty soon. I work nights, so I didn't really have time to, didn't think I'd be able to sit here all day. But as I was watching it, I thought, man, this is really working out good. This would be helpful to some people because as I've been learning this stuff, some of these concepts were kind of difficult for me, like the SMT divergence. I'm just not kind of figuring that out, that if you put put that back over here, if you put these three on top of each other like this, it's real easy to see when you get a divergence, when one of them, dips lower or comes up higher. It's real obvious like this. So for me, I was able to see this as a divergence, and I could have used that to time this bottom pretty well, I think. So I'll keep that in mind for next time. I'm just now starting to use that, but wow, if there's nothing down here to help you, know where the bottom is, like now there's an order block here that was created, but it wasn't there before this candle came down here and did this. So something else I just learned is order blocks and breaker blocks. So an order block is the last candle before a move up or down. So in this case, you got to move up. You've got this last down candle here becomes your order block. Usually you look for more energetic move, but this is still, I mean, it played out just like it should have. And it helps if it's in an area that had swept. So this point right here swept these lows, so this makes this sort of a more valid order block. So when an order block gets traded through with an energetic move, then it becomes a breaker block and it becomes resistance. So a lot of times what you'd expect from an order block is for price to come up here and bounce off of this and then take off. If it doesn't, for whatever reason, the algo's got something else in mind and it's headed in a different direction, which in this case you can see very strong energetic move down. It blew right through the order block, but it came back up, and this order block became a perfect breaker block. You can see how well this was respected 4 times to the tick almost. The price rejected out of here. So it failed me here. I might have, had I been trading, I might have tried to get in here since I felt like this would have been a valid order block. But then I would have got right back in, recognizing that it had been traded through, and that when price came back up to it, there's a really good chance that it would then reject off of it. So, and that's exactly what it did. There's, I'm looking for 5 points, in a trade a day, using a mini or two contracts. That's 250 to 500 bucks a day. And right here, this move right here, let's see how much it is. Where's my measure? There we go. So just from here, 6 points, 6.25 points there. If you measure it from this, if I would have got in on this one, you're looking at 9 points to this point right here. So just that order block breaker block combination right there would have got me my day's trade. I'd have been done. But it gets better. There's some other stuff here that's really handy to see. So trading the open is kind of tricky, but on the 1 minute time frame, these order blocks and fair value gaps are really effective. I mean, this is money right here. If you try to look at it on a 5 minute, it's not as clean for me. In fact, I'll pull the 5 minute over just so you can kind of see. So here's a 5 minute example, and I'm doing the same thing with the divergence over here, but I'm also running the DR IDR on all three indexes in case I want to buy, NQ or YM. I've got all three of them right here. But this is the 5 minute right here. And you can see on the 5 minute, you don't see those fair value gaps. You don't see those order blocks. It's just not there. You really have to be in the minute time frame in order to take advantage of the opening, I think. Depending on, the way I'm doing it anyway, this definitely works better. You can see the difference here in the 1 minute. So you get this bounce from here. Another order block is created. This is the last down candle before energetic move up. So this will be an order block I'll look for later. I'll extend this way out in time because eventually price is going to come back down here, and this is going to be a great order block to look for. So I'm not sure yet how much of this I would have used. It's exactly 2 points, so I could use the full thing. Usually if it's bigger than that, I'll pull it back some and use like the last 2 points worth. If I miss the trade, that's fine. I'd rather miss it than have it go through my stop loss. So let's see, last down candle. So that's the order block. So price explodes from this point here, and it creates this fair value gap right here. So from this top of this wick to the bottom of this wick, you draw that out, you make a box. That's your fair value gap. And you wait for it to tick back into that. Okay, so here it ticks back in. I probably would have, this one was 1.25 points, so I would have used the full gap plus maybe a tick at the bottom. So I would have caught all this. So again, looking for just a few points from here. I don't know that. Well, I guess if I had it set here, I would have just waited until I got my 5 points. So there's 2.25. I'd have let it come back down, bounce back up. There's 3, and then on this move here, bam, 8 points. So that fair value gap in like 4 minutes, 5 minutes would have been a day's trade. I'm done. 8 points, I'm out. But it comes back again, taps into this fair value gap again, and gives another 6 points. Comes back again here. Comes all the way up. We're still running off this point right here, basically. Comes down, taps from here, and from this spot up, we're 10.5 points. So you're looking at 20, 30 points just off of using one fair value gap. It's in a good spot too, because it's in the center line too. This is the opening price, so that's what this yellow line is right here. So there's a lot of confluence there, but the fair value gap was, money. So was this breaker block. What else? Eventually they get traded through, but man, I saw this example and I thought, this is something that is a good way to put several of the concepts together. I just learned about the breaker block. How this works with it actually being an order block that gets traded through, and then on the other side it becomes a breaker block. So I'll definitely be incorporating that into my trading, and the fair value gap is always, everybody's using that now, but it just seemed especially effective right here in the open with the 1 minute time frame. I really wish I could have been trading right now if I'd have known it was going to be like this. Man, this would be too easy. So this is just kind of waiting for the DR IDR box. I'm still definitely, that's my bread and butter. I want to be able to use that. But when I'm waiting for that hour, for price to form that box and do its thing, there's nothing wrong with being able to use the other concepts to, take advantage of that. That's what we want to do, is find as many ways to win as we can. That's edge too. Have a couple of good strategies, and for different circumstances, different time frames, what have you. Anyway, I guess that's it, man. I'm gonna wrap it up, and this is kind of, this is my setup. This is the way I do it. Um, I trade with, this is sort of my um, minute time frame, and then my higher time frames are up here, marked out the same way. So here's the daily look with my daily VIBs, fair value gaps, whatever I can mark up. This is the hourly chart right here, so I'm keeping an eye on what I'm running into. Like right here, we see, there's some resistance here from these. I guess they're volume imbalances. There's a gap imbalance down here. This is the hourly, and then down here is the 15-minute. So you can see tons of stuff we're working through here. But it really helps me to just at a glance be able to see all of this. And then on the left, I've got the SMT divergence, and then on the right, I've got this screen. And this is the screen I probably actually, where did it go? What happened? There we go. This is the screen I'd actually execute on. I've got this set up to be able to buy any three of these indexes. So when I'm ready to buy, if I'm looking at ES over here, then I can either buy straight from ES here, or go to the micros and the micros on the other side over here. So anyway, that's it. I'll try to find some other good IDR stuff here to put out soon. Been busy, been working, so some other stuff's coming out soon. So as soon as that gets posted and I use it a little bit and feel like I have something that's helpful, I'll put it out there. So have a great day, and I'll talk to you later.